What's going on, everybody? It is Charles Moon, the disciple of trend, with the great Howard Greenberg on the Dips to Rips podcast. Welcome back, my man. Glad to be speaking with you again after our week off, brother. How are you doing?
I'm doing well, man. How you doing, Charlie?
I wish I was doing as well as my fantasy football team in the other league, by the way.
I still am lacking a win in our league.
Hey, listen, we're not going to talk about all that, but we should talk about that. This is an interesting time, Howard. We got a pretty, let's say, a pretty big event taking place tomorrow, the CPI data. I don't know, there's a lot of, we've seen how this week is traded. You told me specifically the lack of volatility in crypto, which you laughed at, right? Because that's not two words that are words that you would associate with crypto, but we saw that in stocks as well. It got really choppy. You talked about, how the Bollinger Bands that you were looking at tightened up. I used the VWAP. But same thing, two standard deviations. One is a derivative off the VWAP and one is off the 20 SMA, and both have been shrunk up. So the market is coiling for a move, my man. So what do you think? We're going to go up or go down? Any thoughts on that?
I have been leaning all week to up. I'm now leaning towards down, to be honest with you, Charlie. I think that I do think we come in about range, so that 8.15 to 8.2 area. I do think we hit it, but I think it's the last nail in the coffin of the 75 basis point raise for November.
Yeah. I guess that's kind of what is the big thing here, right? Because this is going to help to dictate policy decision. And, they're not meeting until November, right around this time, maybe a little bit later. So we got at least 4 or 5 weeks until their next meeting. Plus, obviously those yahoos are going to be talking and, preaching their doom and gloom. And this is the problem. The market doesn't have anything to kind of fixate onto. And that's why the CPI data is important. And it's really going to lead to a tremendous move. I run a scanner, Howard, called the inside bar. And basically it showcases when a stock trades within the previous day's range. So lower highs, higher lows. It can't escape. So on this list, last I checked, I had over 200 names, but let me double check here. Yeah, so we finished at around 200 names that have inside bars for tomorrow. So that means this whole entire market has been consolidated into this tight box and is ready to explode. And that release of energy is going to come into effect tomorrow. Whether it's to the downside or upside, it all depends on the data, right? So one outcome is, let's say the CPI data comes in higher than expected. Let's say we come in somewhere around 8.4. What was the previous report? We were at what? 8.3. So let's say we come in at 8.4. That means we came in higher than the previous CPI report. The market's going to freaking lose it. I mean, this is where, we talk about seeing 3,000 in the SPY or in the SPX by the end of the year. We're at 35.77. Hell, we could see it by the end of the month with the way things have traded. And I don't know, again, the question is, how is that going to be relative to BTC? Do you think BTC is going to fall in line, or is it still going to hold up like it has been, right? Because that's how you've been trading it, right? BTC's been holding up really well. It hasn't gone up like a tremendous amount, but it's not falling out like how stocks have been, right?
Yeah, I mean, we've been trading it, or I've personally been trading it in a range between, 20,250 in that range down to about 18,950. And it's been going back and forth in that range since Monday this week pretty steadily, and, being able to go up and down on that, shorting and longing it, using a little bit of leverage on the futures. That's a tight range. We usually see a much, much, much wider swing than that, like you said. You might want to maybe explain to some of our viewers, what that means, how that regression usually reverses, when you see the tightening of the Bollinger, tightening of VWAP, tightening of that range, inside bar, like you're saying, what is usually happens is, the reversal, right? Is what you're looking at.
Well, in essence, I always, the way I teach it to my clients, right? It's the jack in the box theory, right? So imagine a box, right? The jack's inside, and then there's a crank on the side, and you got to turn that crank. And what that crank does is harnesses all that energy in that coil until it releases and the jack pops, right? And that's that release of energy. And that's the thing where, at least for BTC, it's going sideways in a square. Now with the SPY and the Qs, we've been making progressive lows. We've been making new 52-week lows. Officially, where we had closed off today in the SPY, we're down 25% for the calendar year. And so that's the thing. We've been trying to hold up here, and the buyers are trying to grasp on. They're like, maybe the CPI data is going to do well, and it's going to be better than expected, and the market's going to see a relief rally pop, and that's very possible. But if it doesn't, well, those buyers are going to hold on. Those buyers are going to dump, and then of course everybody's like, hell, we've been trending down. Jump in the short now. It doesn't matter. It's going to go down. Dump, 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 dump. And so we see that explosive move. It becomes what's known as a one-sided market, right? There's nobody layering
cascade of events, right?
Yeah, there's nobody layering out bids trying to catch a falling knife in this market because they know it's a losing bet. And so that's the kind of that prerequisite idea here. We've consolidated, and now we know an explosive move is going to happen. The question is in which direction. Most people are betting that the CPI data or the market's going to move lower off of this data. But, you and I were at some point, thinking the possible reversal. I don't know, man. The FOMC members, the ones that are constantly flapping their lips every freaking day of the week, and it's generally the same clowns that are doing it. They haven't guided towards anything that's considered dovish. That would consider that they're not considering at a minimum 50 basis point hike. It's more that they're really geared towards 75 basis point. Now, some are like maybe 75, maybe 50. Listen, they made it pretty apparent that they want that interest rate to be somewhere around 4.5%. And for us to get to 4.5%, it's a 75 and a 50 basis point hike. And the market is pretty much pricing it in. Let me just do a quick check. But earlier in the day, when I checked it, we were at around 82%. Yeah. So let me just share the screen really quickly here, folks. So we're at this point right now where we are projected to have an 82% probability, right? Slightly higher than yesterday, definitely a lot higher than a week before, that we're going to go and move around 75 basis points here, okay? That'll put us at 4% or thereabouts. And then December right now is being priced as a 57% certainty that we're going to get up to that 4.5. And now it's being priced in at around 31.6% that we may see a hike all the way up to 4.75%. That was only at 3% a week ago here. And now we're at 31.6%. So the market certainly is, in effect, kind of saying, hey, listen, the Fed is telling us what it wants to do. So their mind has to be dramatically changed by the CPI data. That means, Howard, if it comes in line, it's most likely going to be 75 basis point hike in November and 50 in December. If it comes in much lower, right? So we come in at 7.9%. That might be the catalyst to put a little risk on, right? That might be where the Fed is like, okay, now we're progressing lower. We were at 8.6, now 8.3, now we're at 7.9, and we're seeing that effect really kind of taper off. We've seen the peak of inflation, even though some have said that they don't believe the peak inflation has been here yet. That might give us a reason to at least hold ground and rally up a bit. But I'm not holding my breath.
I think that, I'm with you. And I think the part of it is, you and I are both pretty much perma bulls in general. And when we start looking at it negatively, I think you're seeing the same thing, that even most, reasonable perma bulls realize that, there's more hardship coming over the next 3 to 6 months. Jamie Dimon doesn't help when he comes on and calls for recession. What's going on in Europe is definitely getting imported here into the US in the way of fiscal uncertainty. So I think that is the other part of it too, that for me you're right. I think that if it comes way below and it looks like, oh wow, we all got it wrong, inflation is coming down and coming down in a significant way, that's going to give the perma bulls that, risk on, let's go get them, see, we were right, they were wrong type mentality. But that's it. Like you said, if it comes in right around where it's expected, I think we still drop, anywhere up to another 5%, as I've been saying.
Yeah. Well, okay, so let's say the markets don't like the CPI data and we start rolling. How ugly do you think it could get? Like I said, I think the SPY is headed for 300 then. And
right. So that's I've been looking at that, and using that as a reference as we talked about the last couple of weeks, that we've seen more and more calls for 3,000 to 3,200 as, sort of that lows in play. I think in that range, we're still in the 17,000 Bitcoin. So I think that range still leaves us in 17. So I think, which would still be a little bit over a 10% drop. So we would see about half the drop that you guys get.
That isn't that bad relative to crypto, For me, what I'm a bit, I guess, nervous about is that that's just the start of where we're going to go and where the fallout could be by June of next year. And, one of the things that we haven't talked about is how this market is behaving and trying to grasp onto anything because there's no real guidance. There's no real, everything is kind of up in the air. Everything is a what if, what can be. David Einhorn, who is a very prominent hedge fund manager, basically said, I don't know how to value things right now. The market doesn't know how to value things right now. And it's true. That's why, there's so much attention paid to the 10-year and 20-year, whether yields are rising. It's a lot of attention. You brought it up, the rising dollar. So the fluctuations of the dollar, right? Yesterday, we saw that market just absolutely tank because of the Bank of England decision. And that sent, obviously, the sterling down and, the US dollar up because that's the fluctuation of the pair. And that, in turn, when the US dollar went up, the markets went straight down. And it's like, holy hell. So now it's not just policy decisions stateside. We now have to worry about, global macro outlooks, from the UK, and now we have to worry about fallout in China. What did you say about Hang Seng the other day?
It hit its 13-year low. So all of the profits made over the last 13 years in the Hong Kong stock market have been erased.
And I mean, that's like the NASDAQ out here.
Yeah, I mean, that's NASDAQ 100 maybe even.
Yeah.
It's insane when you look at it. DXY again could go to like record levels that we haven't seen since the 70s of like $1.50. Now keep in mind it got that high, so we're at $1.13, which is up from $1, which is significant. 13% increase in a short amount of time on the DXY is almost unheard of.
Yeah, it's not typical,
especially over the last 20, our adult lives. We're getting into stuff back to, Reaganomics and, the craziness of the 70s, these numbers, 40-year, you're talking about tomorrow's number being a 40-year high.
It's funny, Howard. I always hear from our clients and they say, you should see what my parents paid for their home, in terms of interest rates, right? 8, 9.
Yeah, 10, but they were only paying $30,000
for the house, right?
The ratio of the yearly salary to the cost of the home has gone up 10 times.
Nuts. It's nuts right now.
So that's the difference. Is you're right, and they are right. My parents paid 8%. It was like nothing, for loans, but the amount that they took out were so small compared to their yearly income. That it's different. But the other thing I will say on crypto, I talked with you a little bit earlier. XRP is something that I would be keeping an eye on in the market right now. They they just got 2 new wins again in their court case, one being that they're going to approve this amicus brief. That means that a couple of companies that use Ripple in their everyday business, use case are going to testify to that, to say that that's why it is not centralized. And then they also, the SEC had appealed the decision by the judge to turn over former Chairman Hinman's testimony to the court, and now they have to.
So Howard, is XRP the unicorn in the crypto market right now? Meaning that's the one asset that could.
It's the one asset that could, definitely close the needle versus the top 10 pretty quickly. You know what I mean? Where they're still, while the rest of the crypto market sits about where it's at, Bitcoin in that $20,000 to $25,000 range. Ripple, that's trading at 50 cents, could definitely be trading at 75 cents very soon. You know what I mean? Anywhere up to $1. Based on that news. And then, Brad Glaringhouse, their CEO, said that they think that there'll be a settlement in the case, or a decision on the case, final decision, first half of next year. So I definitely want to be ahead of that one for sure.
Well, it's interesting because I know it's not just my friends that are heavy in XRP. Some of them actually have made some really good money on that run up, and obviously some cashed out, some didn't. But my friends have been in the modus operandum of trying to accumulate, so they're definitely rooting. They're rooting hard. They're rooting hard for the pump, and it's kind of like, well, they had to deal with the fallout of Luna. I had one of my friends that lost 80% of his entire portfolio in Luna because he obviously was staked out and he just couldn't do much about it. And, I know that there's others in the markets right now that are looking for something to quote unquote moon, right? And, like you have said, things have been very quiet overall, and maybe it's because of the CPI, maybe it's the progress of the market, maybe there's no real catalyst for, crypto to be a mover just yet. But that's why I was asking if it was going to be the unicorn, because it seems like not just my friends, but there's a lot of people that are looking forward to this potentially being the one, over the next year or so, to make that huge move where, everybody could kind of pull out those buku fiat bucks,
Yeah, I mean, it definitely could be the one, Ripple definitely there. The other thing to keep an eye on, there's the former Facebook Diem protocol is, now called Aptos. They've been moving along with their test net and everything there. So you might see that's going to be the next big ICO. They have not launched their coin yet. You can receive their coin if you play around on their test net and get approved as a validator. But APTOS is the former, execs from Facebook's Diem, rebranded themselves as their own private entity, have some big VC backing by the folks over at Anderson Horowitz and others. Sam Bankman-Fried in the group, all behind it. So that could be the other catalyst that kind of moves us back up. You need something like that, something that's going to be a game changer. Polkadot sort of started the rebirth of the bull market back in 2018 when it did its, 2019 when it did its ICO was sort of the start back where people started getting interested in crypto again because there was so much hype on Polkadot. So that could be at Aptos. Ripple, those two are really the two that could change the news narrative.
It's crazy, Howard, with home prices still remaining at these ridiculous levels. I haven't really been looking at the third year, even though my wife is kind of like, we should be looking to buy. I just saw that right now it's around 6.89%.
Yeah, it's insane.
So what could it be tomorrow if the CPI data comes?
They're saying almost 8. Yeah, almost 8.
8%. Now we're back in the early 80s and late 70s, right?
That's what I said. That's what we're going back to. It's crazy.
Instead of $30,000 homes, though, we're talking about
all about the housing crash.
Well, instead of those $30,000 homes, we're not talking about $750,000 homes.
Right, that's the problem.
And how many people have already been discounted from being able to even buy a home right now? Because
it's going to get worse. It's going to get worse before it gets better. And even what I was going to say is, even though I was looking in some of the worst areas are down about 16-17%. Austin, Texas was one of them. Palm Beach, Florida was another one that I saw. Las Vegas was another one. Boulder, Colorado was another one. but that's off of highly inflated prices since COVID.
Yeah. You know,
So they're
and
down 16%, but they were up like 40% before that. So year over year, they're still, way up.
yeah, I mean, I'm personally looking in Colorado, and it's really not coming off here. And the FOMC minutes released today, in the statement, they actually said that they're seeing some of the defaults coming in from what they would establish was the lower credit loans that were given out. And that makes a lot of sense, right? The people with lower credits tend to usually have an accumulation of debt, living, paycheck to paycheck with very little means to be able to dig themselves beyond that, and now all of a sudden, food costs are up, 20% on average, somewhere around 8 to 20%. Gas obviously went from being, $3 a gallon to, I don't know where it is up by you, it's $5 out where I am right now. And, these are people that probably have to, drive if they're not working from home. And all of a sudden, it just the cost of living that they had previously budgeted for is now 30% higher on a monthly basis. Something's got to give. Do you pay your mortgage, or do you put food on the table so that your kids could eat? And that's the thing. And, you and I have talked about this too, right? Personal retail debt is at an all-time high. And, the United States of America in general, their debt is at all-time high. So what's going to give? We're at this environment where people have overspent, don't have money saved up, prices for everything is going up.
Fed's trying to tamp up unemployment.
Yeah. No, and then the Fed, it's not like the Fed's like, oh yeah, don't worry, we're just going to keep putting our cement foot on that gas pedal. The IMF has warned
like
about.
I said, I feel like every time one of them walks up to the podium, I need to put a cup on because I'm about to get kicked in the nuts. It's just, it's either that or Charlie Brown, whichever one you want to use when he goes to kick the football and she pulls it away every damn time. It's just like every time I put a long position on, it starts to move up, and then all of a sudden it just starts dropping, and I'll see on the coaches chat, Mester just said that, we're doomed to drop.
Yeah.
And I'm like, what can you just take a couple of days off? Can they go back on vacation? It's all I need,
I think we got more speakers tomorrow, by the way.
We have two of them tomorrow, I saw at least.
And this is the thing, right? Now we have the IMF kind of warning about Fed actions. And the Fed flat out said, well, we're not worried about global actions. We're worried about actions at home.
Yeah.
But not knowing that that's a direct correlation to global effects. And, we talk a lot about the United States and the quote unquote certainty that we're going to fall into recession. Some have already said that we are, but people don't realize how bad it could get or has been in China. And when we have the two biggest powerhouses in the world that everybody's dependent on, the United States and China, both basically turning or falling into this like horrible economic downturn, that spills everywhere. And that fallout and that effect is felt everywhere. And then
worse because they don't control their destiny.
No.
Their destiny is controlled because a lot of them are using the US dollar. That's why the famous Bitcoin fixes this. In El Salvador, they were reliant upon our money and our dollar to, keep their economy going. And when we gave stimmy checks, they didn't give them to these El Salvadorian citizens, but they were affected of it.
When are we gonna get those shirts?
Oh, I'm ready for them. Fire the Fed. I already have my Fire the Fed. I want my new ones.
Yeah, well, the other thing,
how about
it's a different F word with the Fed.
Yeah. Oh yeah. Yeah. I'm with you. I think central bankers. We need to put them on the goodbye lists. Central bankers.
So when we talk about fallout here, one of the biggest sector that's falling out right now, that's actually tied to both of our markets, is the semis, man. Another stock downgraded their guidance. And since the last time we had the podcast, we actually had AMD, which is the last of the biggest, right? We had Micron, we had NVIDIA, we had Qualcomm all talk bad about their guidance, but AMD was maintaining their guidance, and all of a sudden AMD is like, oh, well, there's problems. So instead of the 7.1 billion you guys expected us to make, we're only going to do 5.4 or something like that.
Don't worry about it.
Inventory.
We'll make it up in the end. A rounding error. Just a
Yeah,
rounding error.
inventory. Yeah, we got a little bit too much, so we have to slow down production. But we think that it'll eventually sell, but we're not sure. But right now we're really backed up on inventory, and I was just like, holy cow! And then today, AMAT Applied Materials had to downgrade their guidance, and that's more not so much in demand. That's actually more in tune with what you were saying about the administration, the ban, right? The ban between sharing our
can't sell
technology.
anything to China. That affects so many different parts of the ecosystems.
Yeah, and certainly with AMAT, that's a big one.
They build systems that build their stuff, right? Now they don't need those systems.
So the fallout is continuing here. And in one of our first podcasts we ever did, I had said that this market is going to be led by the semiconductors, both on the rally and both to the downside, and they continue to leak. Now, NVIDIA and AMD are trying to hold ground and trying to reverse up. But, like Texas Instruments, which has been one of the strongest, is breaking down. Micron has held up all right. But then, I called a short in Qualcomm, and next thing you know, this thing had leaked over 10% in 2.5 trading days. I couldn't believe it. I thought I exited at the bottom. I'm like, oh, man, that was a great trade. And then the thing gapped below the support level the following day, and it was down another $3. And it's just like, well, where's the bottom? It's funny. I don't normally give recommendations for the longer run, but I got to be honest with you, AMD certainly could get back down to the 30-40 range. And I, as a personal, investor from a personal standpoint, find AMD extremely attractive in that range for 5-10 years down the road. And like NVIDIA, I find it extremely attractive under $80 for the long run. And I may be early at $80, by the way. I wouldn't sit here and just buy it all at $80. I would certainly accumulate, but it's almost unfathomable, right? 3 months ago saying that NVIDIA is going to be at $80, and hell, that we're not that far away. We're a stone throws away, my man. I mean, what is going to happen here if the semis continue to go down? I mean, that's going to leak into everything, right? That leads into,
automobiles.
Yeah. I mean, it's just everything. It really is. And, maybe that tells us the depth of miners, which we already knew, right? The BTC miners have slowed down and struggled because I forgot that one story that you had pointed out where we had talked about it. Who was the company that does the primary mining or hosts the miners for Mara?
Compute North.
Yeah. And this is like the fallout is really far reached, right? It's like 6 degrees of separation, but it's going to be ripples felt throughout not just the industry, but across the market because it affects so many different things. And that's another thing that we have to be aware of, right? Because even if the markets rally on the CPI, and yeah, maybe the semis start catching a bid, what's to say that Wall Street isn't going to try and drop the hammer on these semiconductors? I mean, why not, Howard?
Yeah.
Did you know that NVIDIA was under $50 just 3 years ago? They went up 6x.
I knew that they went through the roof. I didn't know that it was 6x.
Yeah, they went 6x from 3 years ago, topping off over $300. Let me just double check how high.
NVIDIA. I mean, they were trading at 2018. You're looking at about $45.
Yeah. Let me just pull this up here really quick. So I'll pull it up on a 5-year weekly chart. Yeah. So 5 years ago,
in December 18th,
$31. And then they went to $346, and now they're at $115. Stone throws away, brother, from that $80 range, $80 to $60 range. Let's look at AMD now. AMD 5 years ago, I believe it was sub $10. So yeah, $9. $9, guys. Went up to $164, and now we're $57. stone throws away. That is the absolute truth. And, even now, as I say it, people probably wouldn't believe me, even though we're this close. But that's the thing. We are that close right now to seeing the ugly get even uglier. And I'm just curious, man, if their guidance continues to get slashed and we don't see the crypto market using their components like they previously had, where's the catalyst? Where's the catalyst?
There isn't, because the other problem is, I talked about earlier today, I think with you was, the other thing we're seeing is that all those COVID plays, whether it be Peloton or computers, Best Buy, all those companies that got those lifts, they ordered all this inventory and now they're stuck with it. Because, once you bought your gaming computer, you don't buy a new one the next year just because, there's not enough upgrade. You know what I mean? And even look at Xbox and PlayStation. Those are now 4 or 5 year holds when they used to be like every 2 years you had to get a new one.
You're right.
Now it's, so now your lifespan's longer. So what do you need another, I'm a perfect example. I was waiting for a good graphics card. Finally, when they went down, I bought one. I don't need one anymore. I'm done.
Right.
That's it. NVIDIA's not getting any more of my money. I got my GeoForce and I'm done for the next few years. I mean, but that's being honest, and that's your average person. It's not like monitors. Monitors, maybe I add a monitor, maybe I upgrade my monitor. But when it comes to like your graphic card, your computer, your hardware within your computer, you don't really do much with that. No. It's not, first of all, most people don't have the technical ability to do it. And it's usually cheaper just to get a new system, quite frankly. And even that's all down. Again, everybody got them. So I think that's another part, that goes to why they were overvaluated, back a year ago. I don't think it's $100 stock, but I don't think it should have been a $400 stock.
It's funny. I kind of saw it a little bit earlier than most because at one point the demand was so big that people were paying such a markup.
Oh, it was ridiculous.
And in particular, it was a lot of miners that were doing it as well.
Yeah, Ethereum miners.
Right. And so, Tay, who was working with me here for a while, he loves to flip. And all he did, like, if you go on my Amazon page and you see, that like your list of things saved for later. So he had alerts saved up for all these CPU, GPUs, and just like almost on an overnight basis, everything became available. And he was just like, hold on, we're not buying anymore. It's like, why? And if you're wondering, Tay and I would be buying them whenever we can, just to sell in the aftermarket. We did it with PS5 as well. I don't know if that's legal. And if it is, Michael, edit it out, please. but
the PS5 is not legal. The other is.
Yeah, now they're still in my cart. And all Tay did was just have my credit card and just run the deals, and then we would flip them. Of all places, we were flipping them on StockX and on eBay. StockX is like a
shitty version of eBay.
Yeah, I mean, originally it was just for shoes and like streetwear, but they do like a lot of electronics now. And I'm looking at these components. These components are less than 6 months old, and they're already on sale. They're
on sale big time. I mean,
off.
Mining machines are down 50% in valuation.
Yes.
So this is not like a small amount. I mean, and take in mind. So if you wanted like a really nice NVIDIA card, you were looking at like $600 to $700, back a few months ago. Now those are back to like $100.
Yeah, there was the new RTX series that had just come out at that time. Were like on the high end. I think they're like the 380 Ti's. Those were on the high end between $800 and $1,200, and we were selling them for upwards of $3,000. And you could see why we wanted to grab them and flip them. It was a big, big return just to have that item, and it's really just like 20 minutes of work. The prices went from 3,000 to 1,800, and then all of a sudden now they're being marked below retail. And we're just like, oh. So actually, it's funny. Tay still has like five GPUs just sitting. It's okay, he likes to fiddle around with his PCs and stuff. But you're right about that, Howard. I had two PCs professionally built, probably around $4,000 of components in each, right? My laptop I just got recently was around $3,800 in components. And I've had my PCs for 7 years now, and they run like champions. Dust it off a little bit, do your updates, and that's it. And like this laptop's going to last me for the next 8 years. I don't need components at this point. And so now we have this insane amount of inventory. And during COVID, everybody upgraded. And so it's like, where can it come from?
There's no one back in the, the people aren't back in their office. Just look at Prosper, so think about that. Even if everybody got a computer at their home, they used to have 4 screens at Prosper, so they replaced that with their 1 screen, maybe 2 at home, and then that's it. And there's no, when you close down offices, with all these amounts of people in them, and then you even look to, like computer POS for restaurants, those are now tablet based. So they're using less expensive chips, less, all that stuff.
Let's go Toast.
Well, yeah, Toast or, any of them that are.
Toast is starting to pop off a little bit here. They're starting to come back to life, brother.
I told you.
Yeah. part of it is the restaurant industry, but man, that's a whole nother subject, right? About how like COVID totally changed the hospitality industry and really where the struggles for workers are coming in from. That's one of the biggest industries, the service industries, where people are just not.
Largest hospitality employees are the largest group of employees in the United States.
Man,
outside of federal government.
It's going to be a wild one tomorrow, Howard. Yeah. I'm going to show up tomorrow with my beanie hat on.
Coming in early. I'm going to hang out in my room. I'm opening up early tomorrow, 8:00.
We'll see. Yeah.
I'll give you a hard time. I'll make you come in and join us in the morning.
No, I'll join in. And I always fill my morning watch list at 7:30. So 7:30 Central Time. So I'm basically going to be recording live when the CPI data comes out. You'll probably see some sort of explicit reaction. I'm pretty sure Mr. Bauer is not going to be too happy, but do want to wrap this up here. We did run it a pretty good amount of time, Howard, man. I don't know what we talked about. I don't even remember, but I just want to say, folks, if you happen to like what you heard, do me a favor, like, comment, subscribe. Like we've always said, if there's certain topics that you want to talk about, maybe it's even trade setups, trade signals, etc., we're more than happy to discuss and break it down, give our thoughts. We'll even really break it down to the core on the charts as well. But more so than anything, obviously, we're trying to make people informed traders, informed investors. And if you happen to like what you hear, we will love that feedback. Do me a favor, like, comment, subscribe, retweet, and all that good stuff. You'll find us on all of your go-to podcast sites, YouTube, iTunes, Spotify. What was the crypto website that you had mentioned, Mike?
I forget.
No, stop. Okay. For the great Howard Greenberg, it is Charles Moon. We are out of here until next time.
See you next week, everybody.
Peace and love.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.